Hey, what's going on, everybody? I'm back again with another educational video. Now, on today's video, I'm going to be talking about 4 strategies for new and existing businesses to get funding, because a lot of businesses are shutting down right now because they don't have access to capital, they don't have access to money, and a lot of the stimulus program or the government programs that are out there, a lot of new businesses that actually don't qualify because they're new to business and they're not accessing these money. So that's why on this presentation, I'm going to give you some strategies for new and existing business to get funding. Now, let me introduce myself. My name is Vita King. I am a credit and business strategist here at My Credit Funding. Now, here at My Credit Funding, our mission is to empower you, to educate you when it comes to personal credit, when it comes to business credit, and when it comes to business model strategy, right? Because we want you to understand how your personal credit works, to manage your personal credit, and to leverage your personal credit so you can get business funding to grow your business. Okay, so let's get into the presentation because we're talking about funding, money, because that's what everybody's looking for, especially a lot of small business. They're looking for money and they're looking for funding. So let's get into the presentation, okay? So 4 strategies for new and existing business to get funding. Okay, so let's look at strategy number 1. So strategy number 1 is all based on your personal credit rating, right? Especially if you're going towards the the bank route. So if you want to get a loan at a bank, they're going to look at your personal credit. Your personal credit plays a key role in this whole concept. Right now, there are 3 types of ways, or three ways that the banks can look at your extending your credit, right? They can look at extending your credit based on your personal credit, right? Which is what I'm talking about right now, your personal credit. They can look at your business cash flow, and then they can look at your collateral, right? So that's what you call the 3 C's: credit, cash, and collateral, right? So credit, cash, and collateral. Now, credit is all based on your personal credit. Cash flow is based on your business cash flow in terms of what's coming into your business, your sales, and so on. And then collateral is you got to pledge something. You got to put up something. You're either going to have to put up, your house as a collateral. You're going to have to put your inventory, your equipment as a collateral. So that's what you call the 3 C's of funding when it comes to funding. Okay, so personal credit, as I mentioned, banks will look at your personal credit. Now, if your personal credit is not good, if it's not intact, then the second strategy will be business cash flow. Okay, so now the business cash flow, the way it works is this: there are a lot of alternative lenders out there right now. It works more, it's more effective with alternative lender, not the banks, because when it comes to the bank, they will look at your personal credit, right? So a lot of the big banks, a lot of the traditional bank, it's all based on your personal credit. Now, there are some alternative lenders, private lenders. They look at your business cash flow. Okay, so the way it works is that you have to be in business for at least a minimum of 1 year, either 1 year. Yeah, 1 year, right? There's some lenders that will look at your business if you've been in business for, let's say, 6 months. But the rule of thumb is they want you to be in business for at least 1 year, 12 months, so that they can see the cash flow, so they can see what's coming into your business. So now, when they look at your business cash flow, they'll be asking you for your statements, your bank statements. They're going to be asking you for different types of documents so you can show them how much money is actually coming in, how much you're making in sales and transaction from your business. Okay, so now, as I mentioned, these are private lenders, right? I'm going to put the list so you can see some of these private lenders, right? They look at your business cash flow. So if your personal credit is not good, you can look for lenders that look at your business cash flow. So now a lot of these lenders will require you to be making at least a minimum of $100,000 a year in sales, right? So if you're in that position, if you're an existing business, if you've been in business for a while, let's say more than a year, and you're bringing in $100,000 in sales, then you can look at reaching out to private lenders that give you credit based on business cash flow. Okay, all right, so strategy number 3 is micro loan lenders, right? So there's a lot of micro loan lenders out there. It could be nonprofit lenders. It could be credit unions. So now credit unions are good. There's some credit unions that are micro lenders. I'm going to actually put a list in there. They look at your, they work with you. Now, micro loan lending, usually it's a smaller amount. Anywhere from $500 to $20,000. So if you need less than, let's say, less than $10,000, then you can look at a micro loan lender, credit unions, right? A lot of credit unions, especially there's one, Alterna Savings. If you're in Canada, Alterna Savings, they're micro loan lenders. You can look at them, you can reach out to them, and then they'll work with you, right? They'll work with your business to see what they can do to help you out, okay? So, and then the last strategy will be if you're incorporated, so small business corporation lending. So if you're incorporated and your credit is not good or your credit is not intact, like your credit is just bad, then but as long as you're incorporated, what you can do is you can add 3 other directors into your corporation for a total of 4, including you, right? So you can add directors into your corporation. So once you add 3 directors, now these directors they can go and apply for funding at their existing institution. Right now, this strategy only works for corporations. So if you're incorporated, your business is set up as a corporation, and your credit is bad. So if you really have bad credit, right, you can add directors into your business. Now, there are some requirements for these directors, for the people that you're going to be adding into your corporation. Now, first thing is, right, you as the business owner, you want to do your due diligence. You want to make sure you're adding the right person, the right people in your corporation, people that you know that you're going to be working with. You got to sell them the idea. You got to let them know, sell them the vision that, hey, listen, my credit is bad. Nobody's lending me money. And my business is about to shut down because I don't have access to capital. Can't pay my rent. Can't pay my employees, right, because of bad credit, and I don't qualify for the government loans. Would you be interested in being a director in my business? And I'll, once you're a director, then you print them a certificate of corporation. Now they can go to their existing bank and apply for lending under the corporation, so under your corporation. Okay, so now once they get the funding, their banks now will look at your personal credit, right? And then once the funding is approved, then then it will be under the corporation name. Now, there's some banks, right? Some financial institution. It really depends on the relationship that you have with your institution. Some institution, they will, once they give you the funding will not show up on your personal credit. Some institution, it will show up on your personal credit. So it's just a question of asking the lender, okay, if I get a loan with you for $10,000, will it show up on my personal credit or will it show up on the business credit? The ideal situation is you want that loan or that funding to show up on your business, on the business corporation, or not on the personal, not on your personal credit, profile. That will be the ideal situation. Okay, so that is strategy number 3, as I mentioned, right? As long as you're incorporated, add these. You can add 3 directors. Now each director will have to have 25% ownership, right, in the corporation. That's one of the questions that the banks will ask you. Hey, do you have 25% ownership in the corporation, and are you authorized to make decision on the corporation? Now, you as a business owner, you can always just write a operating agreement form between you and the directors, right? That just outlines exactly if they get the funding, how are you going to use that funding, right? But that's up to you as a small business owner to figure that out. But that is a strategy. It's more advanced, right? But it works for corporation. But the option is this. So if you're incorporated, even if you have bad credit, you can still get your corporation still can get funding. You just have to add directors. Make sure that the directors, now you want to make sure that the directors that you're adding them, they also have good credit, right? At least 680. 700, even better. They can't have any collections in their account, right? They can't, the utilization has to be low, under 30%. I've talked about this, about utilization. You can watch my other videos. They will explain exactly what utilization is. And then also they can't have more than 5 inquiry within a year. So an inquiry is a hard hit or a hard pull. So every time you apply for credit, every time you apply for any form of credit, you get a hard hit on your credit profile. So a hard hit meaning that you've applied for credit, so it shows that on your credit profile. So you want to make sure this person doesn't have more than 5 application that they have requested for loans within that 1 year period. So that's what you call a hard hit or a hard an inquiry. Okay, so they can't have any collection account. They have to have a less than 5 inquiries within a year. The utilization has to be under 30%. So if they have credit cards or if they have other loans, then they have to have their utilization on that balance, on that credit card or on that loan has to be less than 30%, right? So those are some of the requirements, but I'm going to go into it more on the next video so I can explain it. But that is a strategy that's available that you can also apply, as I mentioned, for corporation. Okay, so let me give you some references right now that you can look at. So there's some fintech banks that you can you look at. So these are fintech banks, financial technology banks, are basically banks that they do most of the transaction online. They don't have physical location. You go to the website and you can do the application there. Okay, so that's what you call a fintech bank. Okay, so now here are some of the fintech banks: Mogul, Modus Bank, Neo Financial. So you can always check them out. There are more. These are just as a reference point for you to know, but there are more fintechs that are out there, but you just have to Google them. Now these are all based in Canada, so if you're in Canada, then all right, you can find them. Or if you are in North America, you just research fintech banks within your city, your country, your province, or your states, and so on. So okay, so those are some fintech banks. And then these are some alternative lenders, right? Some alternative lenders. So these are private lenders. These are not banks. They're not credit unions. They're just private lenders, alternative lenders that you can look out. For. So OnDeck.ca, LendingLoop.ca, SharpshooterFunding.com. So these banks. Now, as I mentioned earlier, these banks or these alternative lenders, some of them they will look at. Some of them they'll look at your personal credit. Some will only look at your business credit, your business cash flow. So it really depends. You just have to research them, go talk to them, and then just explain them your situation. But the option is there, right? So these are alternative lenders. Okay, so there you go. OnDeck.ca, LendingLoop.ca, Sharpshooter Funding. All right, and then the next list. Micro loan lenders, Alterna.ca, Alterna Savings. They offer a lot of micro loan lending. Credit unions are also good, so check out some of the credit unions. So Alterna Savings, a credit union, so they offer micro loans. And then there's also a lot of nonprofit organizations out there that offer micro loans as well. So these are some of the micro loan lenders. So just do your research, do your homework. As I mentioned, there's a lot of lenders out there, and there's some different types of strategy that you can implement as well. And then lastly here, let's see here, you can always connect with us at YouTube, My Credit Funding, Facebook, My Credit Funding, Instagram, My Credit Funding, and then our website, mycreditfunding.com, which is under construction. Once it's up and running, we'll be putting out a lot of resources for small businesses, for individual, about credit, about personal credit, business credit, so you can learn more and you can understand, have a better understanding when it comes to credit, when it comes to lending. Because right now, as a small business, right, before you even start a business, right, if you're thinking about starting a business, you got to think about your personal credit, how to build it. Because once you have your personal credit intact, it's easy to access funding. It's easy to get money. It's easy to get money from banks, from lenders, because your personal credit profile, your personal credit rating is intact, right? So that's why we want to teach. We want you empowered to understand how credit works, so that way when you're starting a business, if you're starting a business, understand, right? That's one of the things that you want to do. Understand how your personal credit works, because your personal credit will be an asset, later on in the future when you need to access funding for your business. Okay, so that's pretty much it here. I will continue with more videos or more content. If you're watching this, if you have any question, if you have any, if you have any inquiry in terms of what topics you want me to talk about when it comes to credit, when it comes to business funding, leave a comment, so that way on the next video, based on the comment, the questions, if there's something specific that you want to know about credit, about business funding, about business model, just leave a comment, so that way I can see what type of topics or what type of subject, what type of questions people have that you want to know more about when it comes to credit, when it comes to business credit, business funding, and business model. Okay, so thank you very much for the time that you've taken to watch this, and until then, I'm going to continue to put out some more video. So peace and blessings.